Well, the first sector that comes into mind when you're talking about the pandemic-infused lockdown, and the sector that is impacted the most is the travel and tourism industry. And within the travel and tourism industry, the aviation sector or the airlines were the ones that were impacted the most, given the fact that most of them were forced to shut down operations immediately as soon as the lockdown was called for. Now, what has actually happened? The numbers that we are looking at, or the results that we are looking at, is InterGlobe Aviation, also known as Indigo. We are talking about the results. The results have come in as a bit of a shocker, honestly. The results are really weak. However, a lot of it was already known and already priced in as far as the markets were concerned. So now you're talking about the reported revenues. The revenues went down 90% on a year-on-year basis. So that shows you the impact that the pandemic and the lockdown has had as far as operations are concerned on a year-on-year basis. You're comparing the results on a year-on-year basis and a 90% revenue decline. The EBITDAR, the metric used by airlines, including the rental that the company has to pay to the EBITDA. So this particular number has come in at a loss of close to 1400 crore versus a profitability shown last time of almost 2700 crore rupees. The bottom line too has seen a loss of over 2800 crore rupees. And when you're talking about the load factors were just around 61% versus 89% last time around. Now, what the company was saying as far as the entire conference call was concerned, the main thing that the company has said was that it is looking to conserve cash and maintain liquidity. A number of things that the company is doing. Number one, it has gone ahead and cut salaries, it has cut expenses a lot. The company has also gone in for one wave of layoffs as far as the entire employee base is concerned. Now, over and above that, the company has also gone ahead and cut down on operating costs. The company is also going in for a fundraising. The company also said that it is going to go ahead and adopt the leaseback model. So again, all of these measures aimed at conserving liquidity. Another important thing that the management said when it comes to domestic operations, the company was quite disappointed that there are salary caps. In fact, they made it quite clear that they would prefer free pricing, and they said that market dynamics, that is supply as well as demand, is something that the company believes would actually help determine fair prices. The other thing that the management implied was that they have started penciling in a certain amount of demand coming in from international operations. However, what the management is saying is that even though they're doing chartered flights, even though cargo operations are still on, there's still a lot of uncertainty. There's still not too much communication coming in as to how exactly the lockdown would be lifted. So overall, you're talking about a very weak set of numbers, mainly in line with what the street was anticipating. Also, what the company said going forward is that they believe that the work from home and a lot of technology would be adopted by corporates, and which is why they started believing that corporates would now see lesser demand. And again, they believe that what they would now look at, instead of the top end where corporates where margins are higher, they're going to go in and ensure that they make a lot of people who now travel by trains get adopted to the airline lifestyle. So overall, they continue to maintain short-term visibility is tough, but long-term continues to remain quite positive, and it is one of the strongest companies with quite a strong balance sheet as well.